Thanks for having me on the call. I've been very thankful to IIM Calcutta for providing such great opportunities in my career, and it feels very good to be part of this flagship program that you've been doing, and simultaneously helping all the PGP candidates and the students in the campus to help them know more about finance as a vertical. About myself, I graduated from IIT Madras, computer science engineering, but I guess within a year of my computer science engineering, I didn't really feel so much fascinated towards coding and needed a bit more of individual decision making, bit of entrepreneurship and adrenaline in life. So slowly I kept exploring different opportunities outside of computer science, and finally felt that my interests and skill sets kind of suit finance, and especially on the markets or trading side more. And that's how I've kind of shaped my career. I've done some CFA level 1 during my campus in undergrad, joined Deutsche Bank in Mumbai, worked there for a couple of years, and then joined IIM Calcutta for MBA. It's been a great experience in IIM Calcutta in terms of just learning the whole aspects of different fields in business, having a great set of friends and colleagues who could add a lot of value even in the campus as well as outside campus in terms of network effects. It's been a lot of fun as well inside those 2 years, and really shaped up the overall career as well as personality. During IIM Calcutta, I fortunately got internship in Bank of America Merrill Lynch for a couple of months in Hong Kong, and that was kind of what I really had been targeting for, an internship in markets division, and then I converted that to a PPO. During the campus time, I was FinPrep head as well, and helped a lot of students in finance placement across multiple batches. So I've always been very passionate towards this aspect. And after IIM Cal, I've worked with Bank of America Merrill Lynch for 4 years in interest rates trading, primarily South Asia rates. And then I moved from Hong Kong to Singapore in Barclays for a couple of years, doing the same in South Asia rates trading, a bit more focused on India. And just a couple of months back, I've switched to a hedge fund, BlueCrest Capital, and it's more on the portfolio management and a lot more of prop trading aspect. That's about me. There are different aspects in the entire finance industry. So to break down, we have, especially if I focus on what kind of roles come for IIM Calcutta, we have global markets, which is the more markets facing kind of roles. You have different roles as tradings, sales, structuring, and so on. And that's on the global market side. And the other side is investment banking division, where you have more of deal making related stuff, M&A, equity capital markets, debt capital markets. And there are some roles that come for corporate banking as well, where you're more into a relationship or a sales kind of role, as well as giving advisory or trade ideas for corporate clients. Those are the three main roles that I see in the bank side. And the further progression happens where you work in global markets, be it a trader for a few years, and then you move as a next step to a hedge fund, where you do a lot more prop trading, and try to look at different markets and try to capture opportunities. Why people move? Usually, it's a lot more of a entrepreneurship kind of thing, where you have entire decision making process in a responsible way, as well as definitely a lot more rewarding as a percentage of P&L that you generate. On the investment banking side, a few people move as a progression towards private equity, where firms like Bain Capital, which used to be quite famous before, or Blackstone or Sequoia, these kind of firms where you kind of use the internal funds and invest in upcoming companies which require funding, and you go in as an early investor, and after a few years, as the company grows, it goes into an IPO, and you try to make 5x, 10x, 100x, or 1000x. So that is more on the investing in a private company, I would say, private equity. Whereas on the hedge fund side, we still focus on the markets, and try to trade a little more on the shorter term side compared to a multi-year investing strategy of private equity. Yeah, that's broadly about it. To be honest, there are just so many different paths that are possible, and that's where I feel having an internship, a broader based internship, definitely helps. For example, in Deutsche Bank, I worked in equities team, and I didn't know much about fixed income or rates, FX, and so on, other asset classes, because these are a little more niche, like need to really know what is happening inside. And then in Bank of America, I got a global markets internship, but it was more on the fixed income side. People who kind of recruited me for internship somehow felt that my skill set or interest kind of aligned there more, maybe through their experience. And during my internship, I kind of rotated with multiple teams every 2-3 weeks, and tried to figure out what kind of work happens there and which one suits me more. And then over the course of internship, I kind of figured out, okay, I like trading more, and I like to be more on the macro side, which is more on rates or FX. And slowly towards the end of my internship, I gave my preferences a bit more on the on a stronger note, and kind of it's a matchmaking process. Even they liked and I liked, and it kind of worked out. If I was a PGP1, I would think in terms of firstly, on my case, there was an added advantage because I worked in the markets division for a couple of years, so I knew how things work. I knew about markets, kind of improved my knowledge upon it. So if someone falls into that category, I think having a clear clarity in terms of what you want to do helps a lot, especially considering that the number of opportunities have reduced a lot in finance compared to what it was 10 years back. I kind of remember some of my seniors even telling stories where 1/3 of the batch used to intern outside India in banks back then, but now it's much less. So if someone has a prior finance experience, especially say working in Deutsche Bank or Nomura or Credit Suisse in their markets entities in Mumbai, though it's not really a front office activity role, but it still gives a lot more clarity and understanding on how things work. So that's definitely an added advantage. I think from there, it helps to figure out what suits more, whether I'm good with trading or sales, whether I want equities or fixed income, and so on. If someone is is not priorly into finance and is very interested towards it, never got an opportunity before in life to explore that field, I think the door is definitely not closed. A lot of banks look to hire also people who are fresh, because young people, even without prior experience, if someone is showing a keen interest to learn, and is fresh with ideas and a great personality, then definitely they would be open to it. What they look for, I would think, even from my understanding, whatever we learn in the campus, even if we are the topper, it probably only means 5% of what we are going to do in a real time job. It's a lot of real time on the job learning experience. It is definitely very challenging in the first 1 or 2 years to learn, because it's not very textbookish. It's a lot more practical in markets, and it that is why I don't think even someone with prior work experience has a huge advantage compared to someone who doesn't have. And if I've done some recruitment activities as well in IIM Calcutta, and I've visited the campus as well once, and what I look for is someone who is very curious, hungry, and has the right attitude to learn and adapt. And yeah, I would say it's not rocket science that we do. It's not like we really need PhDs or masters to do, but it's a lot of connecting the dots, try to read up a lot of things and understand what's happening everywhere. And a lot of people are busy, so you have to have the right attitude to learn, adapt, and not bother too many people for learning. And I would say that's on the market side. On the investment banking side, I've seen some of my friends, like it's a very similar thing, especially on investment banking related internships or full-time opportunities. Someone with CFA or a prior experience in terms of valuations definitely helps, but that's not necessarily the only criteria. And I would expect that again, it's the same kind of skill sets that people look at, like being hungry, positive attitude, curiosity to learn and adapt. The only difference I would see is in markets, the work hours are definitely a lot more lower than investment banking. In investment banking side, usual work hours are 15 hours a day. Weekends are also clocked, and probably like a 90-100 hour work week. In markets, I would probably say 10 hours a day, 5 days a week. Weekends, no one really bothers because everything is closed. So there's a huge difference between those. Pay wise, everyone, if someone is a top performer, they get paid pretty much in a similar way in both markets or investment banking side. And it's the pay is definitely a lot more attractive than other fields like consulting or marketing and so on. And considering that very less people get in right now, the competition set is much more tougher compared to, say, consulting jobs or marketing jobs. That's a drawback. But if someone is very interested, I think the field gives a lot of opportunities, and yeah, there's passion first. I think how I look at it, more than money, if someone is really passionate towards it and is very interested towards the field with a constant curiosity to learn more and more, it gives a lot of job satisfaction, and money is a consequence of it. I think whoever tries to go to the field with an idea of earning more money, or maybe because it's very flashy, sometime down the line, maybe not 1 or 2 years, but 4 or 5 years down the line, you would start getting a bit tired of the job just because you're not very passionate towards it, and you've joined for the wrong reasons. So I think that's very important, not just finance, but any particular job in life. I believe one needs to be very interested and passionate towards it. Even if it is paying lower, it's fine. But in such cases, you actually have a lot of satisfaction at the end of the day. Uh, and even when you wake up in the morning, you kind of feel excited to go to work. Otherwise, the burnout can be very quick. Firstly, I would not call myself an expert, but I mean, definitely a lot of experience and a lot of learnings on throughout the journey. I think a lot of people think that you can earn very quick money, but it's definitely not the case. Especially first 4 or 5 years, yes, you definitely earn a lot more than your consulting friends or marketing friends across. But to earn a lot of money, be it like, I don't know, 500k US or 1 million US, it still needs some time right now. And the industry is going through different cycles. For example, between 2000 to 2008, 2009, finance was a very hot sector. This is how the world is. Like, you always have different industries which are always dominating. And until at least 2010, 2011, finance used to be a hot sector. The number of jobs used to be growing because there used to be a lot more innovations in the sector, which led to more revenue, which led to more transactions, which led to more job openings and an ever increasing workforce. Then after 2008 recession, you had a lot of regulations coming in, which kind of constricted a lot of activity that was otherwise possible before. And slowly, even the increase in technology has led to a bit of redundancies in few jobs. So the workforce actually has been reducing over time in finance, even though some of the other activities have picked up a lot. So definitely there is an impact of technology in terms of how the workforce could be increasing. Having said that, if you have good skill sets specific to your knowledge and your experience, you would probably not be redundant. There's still a lot of manual or a human touch needed in a lot of aspects in finance, and everything cannot be automated. Like, we can't just have markets being operated by machines or quantitative codes, right? Like, there's a lot of emotional and human angle related to it, which is where people come in. And I think the other expectation is that's for finance. Now, if we look at tech has been a growing industry where over time there's been a lot of adoption into the technology sector, where the number of jobs also have been growing across the sector, across different companies. There have been a lot more dominating right now, even in terms of stock prices or market cap compared to banks. Earlier, banks used to have a lot of market cap over tech companies. So there's a huge shift. And this is where I feel if someone is not really sure about finance, and if just trying to go for an aspect of money or fame, then it can be a bit more tougher than what you think, because it's always easy to be in a sector which is growing, because that's where you'll have more opportunities. The pie is growing, and for you to be part of the pie, it's easier. In a stable or a shrinking pie, it becomes a bit more difficult, and you really need to prove yourself and be passionate about it, be interested towards it. And lastly, I would say that the number of opportunities outside India have been reducing. I think earlier, from IIMs, not just C but A or B, there has been say 10 years back, there's been a lot of interest in finance because it's an opportunity for you to move out of India, live in Hong Kong or Singapore, London, New York, and that set has shrunk. I think it's hardly 3 or 4 people every year that are able to go outside now. And being in India, definitely working in a global bank like an American or a European bank gives very good work experience, and you can still banks are very, very pro mobility. So if you have proven yourself even in India and you want to move outside to actually get exposure to much more wider set of markets, I think it's very, very highly possible. And as a student, I used to think that to be a trader, you need to have XYZ kind of skill set. And when I actually joined full time, or even during internship, I kind of realized that even within a specific team, if there are 4 traders, each of them is very, very different in terms of trading style, in terms of thinking, in terms of everything. So there's a lot of diversity in terms of not just the gender, but it's also in terms of how people work, how people think, how people act to make their decisions. And that's something that's probably is one of the best aspects of working, on a trading floor, because you have different personalities, different kind of thought processes, and the way I put it is, in trading, no one can be 100% right, or no one can be 100% wrong. And there are times when I used to take a position which is kind of opposite to my boss, but my boss never used to question me on it, unless something really bad happened, because we both could have taken opposite positions at the time of entry, but maybe the market moved up, I exited, and then after 2 days market moved down, he exited, both of us made money. So it's a very interesting idea that way. So there's no hard and fast rule that, this person is right, I should not do this. There's a lot of freedom, there's a lot of flexibility, and a lot of autonomous decision making that is possible. You're not really constrained so much. You just have to be a lot more responsible in terms of managing your risk and P&L, and try to have more of a straight line instead of up down, and causing unnecessary volatility. Of course, we do not have 100% control all the time. Sometimes everyone makes mistakes, but the idea is to keep learning and growing yourself to become a better and better trader. Even someone like a Warren Buffett is never 100% right. He also constantly adapts and tries to improve upon whatever weaknesses he has. So yeah, that way, for me, I feel like every day is new. There's something very exciting to look up to, and there's no hard and fast rule that, okay, this is going to happen this day. So I have to constantly question myself, quiz myself on what's going to happen and how I need to be prepared, or what kind of position I can take, and if I'm right, whether I can exit now or have to wait for a bigger move later. So there's this constant decision making that always happens, and that keeps me very excited every time.
Right, that's fantastic, Nagendra. So now that you've talked about how a career graph looks like in the industry, and what we should do and what the recruiters look for. So as someone who's doing their first internship at IIM Cal, right? So what is your one final advice for someone who's going into the internship process right now?
I think just be open. The people who come for recruitment are primarily looking for, everyone who's coming for recruitment kind of knows that to reach into IIM Calcutta, it's one of the top cream in the country. That's a given fact. People are not trying to look for a proof that you're sharp or you're bright. It's a given fact. maybe I'm saying majority, I would say 90% of the recruiters. Of course, you would always have some set of recruiters who are looking for different facts, but I would say in finance, majority of them are looking for people who want to show more than what is there in the resume. Like everyone kind of knows that, okay, this person is sharp, he's come from whatever IIT or other engineering colleges, come to IMC, someone has prior work ex, that definitely is an added value. But that's only one aspect. Interviewers kind of want to know what are the other aspects of you, whether you have the right attitude, whether you're curious, whether you have actually, if you want to get into a markets intern, whether you have spent these last 1 or 2 months to understand what is happening more in the markets, and whether you are able to comprehend uh, your understanding in a very logical way. And most of us know that it's very hands-on learning. You don't really need an IIT or an IIM degree to actually become a trader, but the fact is that the number of jobs are so less that you can automatically get some of the top colleges to uh, to go and hire some of the best people. And of course, the branding and so on definitely helps. So I think it's more about just doing your homework well, research. When I used to be trying for internships in my first year, I used to go to every bank presentation. I think I was asking a question in every presentation. If not during the presentation, after the presentation, I go to them, I speak with the people. Some of them try to remember who are the candidates who are asking questions, who are more curious, who are more proactive. And when you interact, it's not just about scoring brownie points, but also trying to understand how their life is, what are their expectations, what kind of roles they're coming for. And I used to research about the bank, and I used to speak with a lot of PGP2s. I think I spoke with almost every PGP2 who's interned in markets, because I was very focused on markets, maybe like 20, 25 people, 15 or 30 minutes per person. I kind of met them personally to understand what their internship was and what was their experience for those 8 or 10 weeks. And that gives a flavor of how each bank is as well. And yeah, I think broadly about it, like doing a lot of research, doing a lot of homework about internships done by your seniors, about different banks, being proactive during the presentations or post-presentation talks. And there's this book called Heard on the Wall Street, has some basic puzzles which sometimes get repetitive during interviews. More than puzzles, I think people would really love to know your understanding of markets. So someone should be definitely more prepared about what is happening globally in terms of growth or inflation, what the central banks are doing, what the governments are doing. For example, the top central banks are US Federal Reserve, or European Central Bank, ECB, or Bank of Japan, BOJ. So these are the top three central banks and countries that people look at and trying to understand what is happening there. Okay, last year there was COVID, recession, something that was more nature driven, or yeah, it's a pandemic and humans did not really have control. So government stepped in, central bank stepped in to help the people. There was a lot of QE done by central banks. There was a lot of fiscal stimulus done by governments. What was the after effect of it? Yes, growth rebounded. There are some inflationary pressures also. What are they doing right now? What happened broadly to stock market because of this? What happened to interest rates? Just having a broad picture of how everything got connected, like just connecting the dots. And if someone is able to confidently speak about these things, that's really impressive, I would say.
So hey everyone, I'm Prabal Gupta, born and brought up in Delhi. I did my undergraduation in Bachelor's in Finance and Investment Analysis from Shahid Sukhdev College of Business Studies, University of Delhi. Post that, I directly decided to pursue my MBA at IIM Calcutta, so I'm a fresher. But during my undergraduation days, I interned at Nippon Asset Life Management Company, erstwhile known as Reliance Mutual Fund, and Goldman Sachs Investment Banking Division, their Bangalore office. In my summers at IIM Calcutta, I got the opportunity to intern at Morgan Stanley Investment Banking Division at their Mumbai office. So yeah, that's a bit about it. So first of all, before you even begin preparation, you have to decide that whether finance is a field that you want to pursue as a career. And within finance, there are multiple options, and you need to narrow down at least to 2 or 3 options. And these are the 2 or 3 main categories that I would be looking at. So I personally was interested in investment banking, asset management, and corporate finance. And the preparation for all these 3 roles are 90% the same. So that really helped simplify things a bit for me. So I started preparing, I would say, at least 2 months before the actual summer's date. So 2 months before that, I started preparing with valuation, with corporate finance, revising my accounting concepts. For people who are not from a commerce or finance background, I would recommend that start even before 2 months from the placement date. Pay very good attention to CFRA. Accounting concepts is something that is used across the field of finance, and they are indispensable when it comes to working in this field as well as for the summer's preparation. So pay a lot of attention to topics like ratio analysis, understanding of 3 financial statements, how are they linked, horizontal analysis, vertical analysis. Things like these are very important even from a career perspective. So this is something that is non-negotiable. You should know this in and out. Once you have had a good understanding of accounting, the next step is to understand corporate finance. So when I say corporate finance is basically centered around 3 decisions, which is capital budgeting, financing decision, and dividend decision. So what this means is that corporate finance is more geared towards how things look from a perspective of a company. So you need to be good with concepts like investment analysis, projecting cash flows, net present value analysis, discounted cash flow analysis, internal rate of return, discounted payback period, multiples of invested capital. All these kind of things are really important when it comes to capital budgeting. Then you need to be aware of financing decisions. What is the capital structure of a firm? What is the benefit of debt, retained earnings, equity, preference shares? What is different types of debt, different types of equity, how to calculate the cost of capital of the firm, different models used in this process. And then finally, you need to have some idea about what are dividends, when does a company pay dividends, what are free cash flows, when does a company decide to buy back shares, things like this. Then comes the main part, which is very, very critical when it comes to investment banking or asset management. That is about valuation. So valuation is something that is not covered in the first year of the MBA curriculum. So this is something that you have to completely prepare on your own. So for valuation, Ashwath Damodaran is considered to be the dean of valuation. His books are used worldwide as part of curriculum courses, and that is something that I used as well. And that is something I would also recommend people that going through the book is something that will really, really help you understand valuation at its very basics. It will give you an intuition for this field of study and really help you when it comes to interviews as well as in your career. A shorter way to go about this is that you can skip the reading of the book and directly watch the very well-detailed videos that Professor Damodaran himself has uploaded on his YouTube channel, which are accessible free of cost. So I would recommend that if you have time, read the book. Reading the book will give you much more deeper insights into everything. But if you feel a bit short on time, videos are a great way to get yourself updated through the topics of valuation as well. Then comes the final stage of the preparation. Once you have done all this, which forms the around 80-85% of the interview will be centered around these things. Now the rest 10-15% will be personal questions. So when it comes to finance, especially investment banking, personal questions are very limited as to introduce yourself. Why should we hire you? Why this company? Why this job? Why finance? Why would you be willing to work long hours in investment banking? Because these are the kind of personal questions that you will encounter, and it's suggested that you prepare all these questions in advance, have a well-defined answer that relates to your story of your life, that relates to your resume, that relates to your own interest, so that the interviewer is convinced that you are genuinely interested in this field. And then one final aspect is sector prep. So sector prep is basically, so you have to pick up a sector. By sector, I mean any sector of the Indian economy. Could be auto, pharma, metals, industrials, chemicals, cement, insurance, banking, IT, any sector out there. You pick one of the sectors according to your own liking, and interest, and you study about that sector in depth. So when I say study about it, it means three things. First of all, first part is sector overview. So you should know what the sector is all about, where is the sector going right now, and what is the future outlook for that sector. So these are the three things you know for part one. Part two is basically you need to know about the major companies that operate in this sector. What is their business model? How do they earn money? Who is the biggest player? What are the new competitors entering? How are things being shaped in the sector? Basically, the competitive overview of the sector is something that should be covered in the second part. The third part is all about finance. So how do you value companies in this sector? What are the common relative multiples, relative valuation multiples used? Can you use a DCF in this sector? If yes, how? Probably pick up a company in this sector as well, try to prepare its own valuation model and give a suggestion as to what the company can do differently. Is it undervalued, overvalued? Would you recommend buying it at this price? As an investment banker, what are the suggestions that you can give to this company? So everything finance will come in the third part of sector. So once you are done with it, I think you are good to go. There's not much else to do except maybe read about a bit of current affairs, see what is happening in the business world, things like this.
Okay. So with like 2 to 3 weeks for the summer.
So if you are just 2 or 3 weeks away from the summer placement process, I would recommend that you need to really gear up and focus on only the very key aspects of preparation. The reason being that a lot of companies will start giving out shortlists at this point of time, and you will start having buddy calls, first round of interview. So you can't really push your prep further down the line. This is something that you have to actively do in the 3 weeks leading up to the placement date. So for that, I would say revise all the formulas, all the concepts used in valuation. No need to go through videos, no need to read the book, just Google it out, prepare a cheat sheet or something which you can go through again and again, revise those formulas. Read about the sector that you have prepared about, what are the recent news that have come out, any recent companies that did a fundraise, that got listed, that entered into a merger and acquisitions deal, any recent happening in that sector you should be really aware about and should know it in and out. So I would say revise the formulas, revise the technical aspects, as well as keep focusing on sector prep and preparing your personal questions. This is what you can do in the last 3 weeks. Okay, so recruiters look for two things. I'll answer. I think this is applicable for all fields, but I'll answer from the perspective of investment banking and finance. So recruiters look for two things. One is interest, and second is preparation. So when I say interest means interest in the field that you want to pursue, as well as interest in that company and that job. So through your answers, about introduce yourself, why this job, why investment banking, when they ask you technical questions about the sector, your passion for this job or the sector should really come across, so that the person interviewing you feels confident that this guy is actually interested in applying for this job and wants to work here. So interest is something that they are definitely looking for, and that is completely non-negotiable. So it does not matter how much knowledge you have. If the interviewer feels you're not interested, they will not shortlist you for further rounds. Second is preparation. So by preparation, especially in investment banking, they want people who are already trained. By trained, I mean who can hit the ground running, who don't need to be spoon-fed everything, who don't need to be explained everything, who can figure out things on their own and start working right from day one of their internship. So how can you project this point across to the interviewer? So basically, in your resume or in your profile, it should be visible that you are comfortable with the topic of finance, you have worked in this field before, or you have done projects in this field, or competitions in this field, or some research papers in this field, or you are actively interested in this field, so that I don't have to explain the very basics of what happens here. Second, it shows that you should be very quick to learn. So at the slightest opportunity of time, or with very minimum information, you can figure out things on your own. You can research, you can Google, you can read company annual reports, and you can figure out stuff on your own, that this is how things need to be done. So you need to be very adaptable and quick to learn. And I think the third part is basically they look for hard work and initiative. So if in your resume, in your answers, in your profile, you can bring across this point that you are not willing to slack off, you are willing to work hard, put in those efforts, put in those required number of hours, you like being with numbers, being with finance, learning about business, working with Excel models, preparing presentations. This is something that you need to actively bring across through your profile and your answers, that all these things interest you and you are willing to work hard and put your efforts behind it, and that will cut the deal for you.
Is that 2 and 10?
Okay. So one of the biggest myths when it comes to finance is that you require work experience or professional education in this field to get a job or even get an internship here. I think that's a complete myth. Once you have a shortlist, and shortlisting is something that is completely dependent on the company, you can't really predict it, and there is no criteria used as such that you need to have a minimum work experience or a minimum finance degree. That is not what they're looking for. As I mentioned, they're looking for interest and preparation. That is some, if you are able to do both of these things, none of the other things matter. So irrespective of what your qualifications are and what your work experience has been, if you get a shortlist, then you are on an equal footing with all the other people who might have worked in finance before. So that's a big myth, that you need to have some kind of degree or work experience. All you need is interest and preparation. Another myth is that I think finance is all about numbers and maths. I think that is completely wrong. The kind of maths used in finance when it comes to asset management, investment banking, or corporate finance is very basic. You don't go like above addition, subtraction, multiplication, division, maybe at times a little bit of regression. That's all you need when it comes to quantitative abilities to succeed in this field. Numbers are just a way to support your argument, but the argument will always be about insights about that business. Why do you think that business makes sense? Why do you think it will command that valuation? Where do you see the growth happening? Industry devices. So I feel this field is much more insightful and qualitative in that sense. Numbers are just a part of it, but not the main part. So as I mentioned, I interned in the investment banking division of Morgan Stanley, and as I have mentioned in other answers before, like you are expected to work as an employee right from day one. So there is no difference between an intern and an analyst who joins the firm after their MBA. So you are expected to work on live deals right from the start, and that's what I did when I started my internship. I was assigned an IPO transaction that was that the company was working on at that point of time, and my work revolved around researching about the company, going through the prospectus of its peers, seeing what are the key metrics that we can disclose, doing some financial analysis for the company, understanding its business model, understanding what are the key points that we need to bring about in our pitch to investors if they are looking to invest in this company, preparing the prospectus of the company, preparing the financial statements, doing preliminary financial analysis, trying to look at relevant multiples to arrive at a valuation range for that company. So this is all that I did in that IPO transaction. Apart from IPOs, if there is any M&A transaction going on, any pitch that you are giving to a company, any financial advisory you are giving to a client, that is all you get to work as an employee as well as an intern. So my work revolved around building Excel models, doing analysis, doing research, reading reports, reading entire prospectuses, preparing presentations for the client, for investors, and coordinating with the clients, coordinating within my team, and coordinating with other parties on this transaction, maybe legal counsel, other banks, research organizations, all these firms I had to coordinate with to come up with a prospectus and an action plan for the client to get listed. And so the second part of the question, what are the things in MBA that help me? I think more or less everything. From a technical perspective, CFRA plays a big role in helping you understand about the company, its financials, how to look at it. Even courses like marketing, strategic management, organizational behavior, I think these are indispensable when you work in a big organization. So because you do not need to just understand the finances of the company, you need to understand the industry, what is its marketing strategy, what strategies the company leaders are going to follow, and how does this align with its finances and future growth opportunities. So I think it's a whole package. So all the subjects to a lesser or more extent help. And then the biggest thing that helps is that MBA prepares you to take on pressure and work with very limited information and time. So the entire MBA curriculum is designed in a way that you will get a brief case, you need to read about it, research about it, and then present your thoughts and critical arguments in the class. That's how MBA curriculum works, and this is how investment banking's jobs work as well. So we'll be given a brief about the company, some supporting data, documents to go through, research, and then come up with an argument and insight, a presentation about why this makes sense for the company and why this makes sense for investors. So to work with very little information, to find your own path, to research, to learn those key skills of making an argument, presenting to the client, presenting to investors. This is something that is very well ingrained in the MBA ecosystem, and this is something that carries forward to your career. I would just say that finance is not at all intimidating. It's not all numbers, not all maths. It's a very useful field to know about, even if you don't want to pursue it as a career. This is something that will benefit you in your personal life as well as in any other career you choose to end up in, consulting, marketing, operations, product management. I think an understanding of business and finance and investing is indispensable in the current world that we live in. So I would urge everyone to at least know a little bit about this field, give it a chance, learn more about it. There is so much variety in finance, corporate finance, asset management, equity research, corporate banking, markets, trading, sales. It's just so much variety that I think that if you give it a chance, know more about it, it will definitely excite you, and you will get to learn a lot from this field.